Welcome to Trading Lounge and the Australian report for the 22nd of June. I want to start with the Nasdaq, and the reason for that is obviously this is the new world technology, and a lot of the other stocks, a lot of the other indices rather, have got combinations of Nasdaq stocks in them, so they tag along as such. But it certainly has been the leader in the recovery. It's made new highs here, and I think it's important to really consider this market more so than the S&P 500 in a way, and also the stocks that are leading it into this as well. Now, the situation here with the Nasdaq is that we've got wave 4 here, and we're looking for wave 1 to the upside here. Is it possible to have this blue wave 5 in here? Probably. So we just need to be a little bit mindful of that situation as well. But also the other point here too, as you know, we have reached 10,000 here. So we're looking for this market to correct now from this level basically. So it's going to bring in weakness here. And when we look at say Amazon here, one of the largest stocks, also that was on the weekly chart before, this one's on the daily chart. So once again from here we've got a wave 4 here. We can look at this as 1 and 2 and 3 and 4 here, and 1 and 2 and 3 and 4 and 5 here. So there's a reasonable chance that we have a top in play for Amazon as well. So if this is going to move down, then the other markets, other markets is going to move down. So there's a bit of, just wanted to introduce that pressure there. So I think it's a good idea just to keep an eye on Amazon and Nasdaq at the 10,000 for this. So with the ASX here, I've got the market as wave 1 here and wave 2 here, and possibly wave 3 here, with wave 1 here and 2 here, then 1, 2, 3, 4, 5 here. So the market can pull down to the 38.2% retracement level, or the wave 4 of 1 lesser degree in here for this. So this current move down through here it appears to be in 5 waves. I can count it as corrective as well. I just need to be careful about this situation. I mean, it's hanging here pretty much like the banks and BHP are doing as well. So also too here is we've also got this other pattern here as well. I just sort of really want to point out the bearish side of the market today a little bit. So we've got this move up here for a wave A here, and we can look at this as A, B, C, D, E here for wave B here, then 1 and 2 and 3 and 4 and 5 here, and have it completed up here because it's pulled up to the 61.8% mark. It can be counted as corrective here. So it's possible, and this move down through here counts quite nicely as 5 waves. So it's possible to have this as wave 1 here. I mean, even if we looked at it as wave 4, so wave 4 would come from these 5 waves here. So the 38.2% retracement level comes in around this level here. So it's okay in a way, but it has breached it. And this is the wave 4 of 1 lesser degree. So it's it's okay in a way. Yeah, I mean, even from just shooting the breeze here a little bit, if I can just grab hold of that again. Sometimes it's impossible to get hold of that, so you have to do it again. So from, even if we counted this as 1 and 2 here, so even if we counted it from here like we've done with BHP and so on, then the 61.8% is down here. So I just also want to point out that, if the market breaches drops below this level here, then we'll have to confirm that this is a wave 3 coming down here at that point. So I'm thinking that, Friday closed weaker. So that means Monday is likely to follow through on that. I know we had the quadruple witching in the US on the options and stocks and so on. So the markets were, a bit volatile in that regard. Yeah, I mean, BHP was still down in the US over 2%. So there is, and gold is pushing up. These markets can push down. So even when we can come back to the ASX. If we have a look at iron ore for a moment, we know that we've been pushing up as 1 and 2 and 3 and 4 and 5 here. Now, I don't know if this is just part of a corrective rally or we've got wave 1 and wave 2 here. But even if that's wave 1 and wave 2 here, we still need to pull down further for this anyway, So because we got those reasonable 5 waves here in this space. And then that also brings us into BHP, if I can just bring BHP across here as well. So with BHP, we can count 1, 2, 3, 4, 5 as we have done. So we can have that as wave 1 or wave A, an A and a B and a C here for wave 2 here, and then a nice 5 waves up here for wave 3 or wave C here in this case as well. So if it's going to be a wave 4 pullback here, then it just should pull back into this space here for this. If it pulls down any further, if 33 or 32 becomes the retested resistance, well, then we've got a bit of a problem at that point. So I'm just wondering, I mean, it's much higher risk, and just be mindful of that. But if you're going to get in, then this is the place to get in, and this is the place to put the stop here at this place here. So I think that it's probably worth a crack. But what we'll have to do is we'll have to take some profit a little bit further down here, probably at the end of the day. So taking some profit at the end of the day here, maybe half of it or whatever, and then we'll just see how it goes. And then that way we can look to add back in if the market pulls down here further. I mean, this is the same for CBA as well. So with CBA here and the other banks, they've had this particular move here, which looks pretty corrective to me, the way it's just because if this was wave 1 and wave 2 here, then it'd be much simpler and much sharper, but there's more days spent in the correction. So it really makes it than in wave 1. So there's more days spent, more time here. So it's likely this is a wave B rather than a wave 2. Now it has popped up quite nicely, and all the banks have done, and we can count pretty much 5 waves up here. So we were thinking about going long above here, and that's that's fine. The move down here appears, rather impulsive. So I think that it's okay to look for a short trade right here as well. Now, we're trading against the trend for all of this. So we need to be a little bit mindful of that. We don't want to overdo it and all the rest of it. And I think we can just pretty much bring our stop down to this point here. So a bit of a robo entry, basically. So even if you do half a position here, that should be okay at that stage. I don't know, it's trading against the trend. It's higher risk, so you're going to be exposed further. So, trading less would be the way to move into this situation here. So we'll just see how we go. I mean, if you want to do that, but today should be weaker, so that would be the move forward for that. So just moving these out of the way here, the iron ore and so on. So we're left here with this. So I'm just pointing out that, just recapping this situation here, that we can look at the ASX as an A and a B and a C wave here at the 61.8%, finished as a corrective move, and we have our first impulse wave down. And really, realistically here, we should be on the short side here, and we are already on this because we looked at shorting through here. But just for the sake of this chart here, I'm just going to put this here in case you're not short here, and then we'll just put I know it's a long way away, but we'll just keep the stop. We can bring it down a bit. We can put it under this one here and just keep that out of the way. I mean, less is more anyway at the beginning of a trend, so you may be able to get it a bit closer as well. But don't forget, we haven't, with this move down here, we haven't had our pullback in this regard yet, so we need to look at that. It's likely to drop down further, but we still haven't had that rally back. So the rally back is something that we need to be a little bit mindful of with all of this here. If this is going to find support here, then it's going to find support at the 50-60% retracement level, which is down here. So we'll put that in here just to sort of highlight that support area here, because if it's bullish, that's where it will come to and then move up from that point. This can be a bullish picture here as well. We could count this up here for wave 1, and then an A wave, a B wave, and a C wave down here, but it still need to come down further as wave 1 and 2 here, and coming down for 3, 4, and 5 here. So taking a percentage in this space here is a reasonable idea as well. So I'll just pop that in here, because we need to, we need to navigate through this move coming down here, and it's not always as simple as it looks, but taking a bit of profit while you can is yeah, it's not being greedy, is it? It's just doing your job. So okay, so I've mentioned the bearish side for all of this, and now we'll just go in and have a look at the bullish side for this as well. So one of the bullish sides here is looking at wave 4 already completed here, and then looking at this as wave 1 and back for wave 2 here. Let me just, I mean, we could look at it as an expanded flat. This move up through here, it kind of bugs me a little bit, because, I mean, it's, I'm just going to put this over here for this, because this is the way that it would play out here for this. It is the higher move there, but I'm going to take it back to wave 1. It's very unusual that we get an expanded flat correction in a wave 2 like this, so it's probably not the case. But I think just for support reasons that we need to put that in here, and that would be its target area. So that's where you could take profit from in here if you were looking at that. On the, I'll just see what I've done on the 1 hour chart. This is another way to look at it in terms of looking at all of this as 5 waves down here for the A wave, then the A, then the B, and then the C wave here for wave B, and then looking down deeper in here, level with wave A here, a bit lower for wave C or 4 here. But, the NASDAQ is still, basically just topped out with Amazon. And yet we've already made this move down through here and had our rally here, so we just really need to be careful here. So in this case here, we're already short here, so that's fine. This will be 1, 2, 3, 4, 5 here. So we can, off this low here, probably expect a, because it's already built in here off, well, let's just use the 5.9, it's right there. So we'll use this 5.9 here. There, and of course it can come down lower into group 2, so on in there. But one of the main points here is that, yes, this can be down for 1 and back for 2 here and going into a third wave here, but it could also just be 1, 2, 3, 4, 5 coming into here and having a retracement level there. So I'll just put that there, and this is just good to know, so you can just keep your stops out of the way at this point. So that's where we can come back to there. So that just needs to be we don't want to be stopped. We just don't want to be stopped. If you've entered here, then just keep the stop here, and if you're concerned and you see a bit of a rally moving up here, then take a small percentage here, so you can navigate through the that's kind of down at group 2 here. So if I just put this here as a thin line here and put in group 2 here, which is beginning at 80 here and then we've got 72 in here roughly, and 65. So this is its job here to keep the market back to the 5.9 here. So we'll probably end up seeing something, you know, like this coming into here and then trying to climb back up into here before collapsing again at that point. So we'll just we'll just see. And if we do get a corrective move up here, then we need to move in again over here for this here. We need to be back in over here for this. So we just got to work our way through this if we're going to be moving down. I just don't know how far we're going to be moving down. So I mean, I can see the bullish side to the economy, you know. I mean, basically in a way we're in the recession at the moment, you know. It's not like we're waiting for a recession. It's like we're in it, you know. So the markets have moved up, unexpectedly moved up for a lot of people, not so much for us guys, but so that was sort of unexpected. And now that it's moved up, all those people have got high expectations of it, you know, moving higher. They're all sort of bullish, but it's moved up to a point where the Feds aren't putting any more money into the system. So it's just likely to go sideways for a while. You know, before seeing any other move to the upside. I'm just a little bit concerned that that there is a bigger bearish picture there that we haven't resolved yet. So all I'm thinking about is if we were going to short that bigger bearish picture, then these levels here for this market, BHP and CBA, well, this is the time to do it right now. But I don't know if it's going to play out or not. So that's the risk. But I think in terms of the rewards, because if this is topped out here, then this market will move back down to 50 for this, you know, because this makes this a corrective move here. So in that regard, we've got plenty of time to build in positions through here and, you know, get further down. I just don't know how far. I don't know if it's true or not, but it certainly plays out as a corrective pattern, then with the first impulse wave down, then the 61.8% rally. So this is the time to start getting small positions in here. We could certainly be wrong, but if we're right, then the reward for that comes into play as such. You know, for the banks here, we may only come down to, it only may just be a 50-60% retracement level here. So as an A wave, because A waves are sharp, and then a B wave here, and then a C wave down into this space, and then a move up from that point there. So that's what we're kind of expecting with the S&P 500. So yeah, once again, you know, we just got to, so it's something that we just need to work through. But once we're sort of past all of this here, if we do come down as an A and a B and a C down here, and we start to move up, well, then we know that the recovery is on its way in terms of the wave count, and we can start playing the market to that side. But getting past all of this has always been my concern, and yeah, I think we're doing the right thing in shorting all of this, but how far will it go? That's the question. That's the question where we are at the moment. How far will it go? You know, how are we just going to correct as an A and a B and a C wave to here, or are we going to be moving down further? If we're going to be moving down further, then this will be part of the first. This will be wave 1 and 2 here, then 1 here and 2 here, and then 3 here. So it'll pick up speed to the downside. We need to see what the S&P 500 does. This is just the September futures here. You know, we can count 1, 2, 3, 4, 5 here for this as well. So the same thing's happening with the S&P, just not with the NASDAQ. And yeah, it's, you know, it could stop at this box here and then go back up as a wave 1 up here, back for wave 2, and then move up there. But because of this 5-wave move here, we should be seeing some sort of deeper move into this space down through here. So that's kind of what we're going for at the moment. So I'll leave it at that. But the same thing with ANZ as well here. So we can also look to short this situation here, and we're expecting Monday to be lower in this case. So we've got the wind behind us here, so to speak, and we can look at being long if the 20 here becomes the support here, as I've mentioned before. And obviously the support down here is the next level down at 18. So we'll just see how this plays out through here. All right, I'll just leave it at that. Thanks for tuning in. Much appreciated. Cheers.